So cattle aren't really doing too bad here with all this Japan news. And based on the facts, it's really not that hard to see why. As far as Japan, they are number 4 buyer of U.S. beef, and they are, in terms of percent, 15% of our exports. So it's not too bad here, and also considering the fact that cattle actually are running right into all this Japan news on some extremely great momentum. Of course, that trade up to 118 last week was a big surprise and certainly a cause for a lot of excitement here. In terms of why we have this excitement, obviously we've got some good things going on for just demand issues, but also supply. So now we're reaching in the time frame here, as you can tell by this chart, third week of March here, this is going to be the high to supply time of the year as well. So this is normally why we also have that chart. In fact, if you look back here at this peak, seasonally, well, guess what? Seasonally, we peak right around this time. And it kind of works out exactly to that same point as far as the tight supplies. So we should expect that the futures as well as cash is going to hold firm here this week and start to work on the ideas of, well, maybe it's time to start putting in the top. Because as we look here by this chart for beef supplies, we start rallying and we start increasing supplies going from April on out. So we expect the same type of normal price decline to happen here in this market. And as I mentioned in previous comments, keep in mind all those placements we did back in fall, those will all be coming out of feedlots from May through August, right at the time we have the largest supplies anyway. So here's the confusing part if you're looking at this from an analyst standpoint. Why the heck are these futures here, June and August, priced anywhere the same as what we're trading with right now? Why do we have this market saying we're not going to see a drop? We just noted right here we're going to have a seasonal increase in supplies. On top of that, they're going to be 8% larger than last year. So I think these Junes and Augusts are still severely overpriced. I like the idea of doing 3 ways, 114 puts for a base. Selling the calls, you can do 120 or 122s, and that'll keep you safe. And in terms of downside, 106 for a put on the base end here. So still think that this is a great opportunity for all guys to get the hedges locked on this rally. We have 50% covered, and we'll probably work on the remaining 50% at the end of this month here as we finish with this short supply period. As far as pork, I've got only one chart here for hogs, and that's simply showing the importance of Japan, which is this base blue block here as far as the past few years of trading. Japan is our number 1 buyer. They buy 30% of all of our pork. That's why this market has taken the last couple of days pretty hard here as far as all this action. And if you take off, if you drop these guys maybe 10% in terms of their buying, that equates to kind of about a $3 to $5 lower price. And I think we've already taken care of that in the last couple of days of futures trading here. So as far as hogs, hopefully we should get this market stabilized and by tomorrow or so, and we'll start to see if we can kind of hold this ground for right now.